Welcome back to another pipeline trading video. Today, I want to share what I think is going on in the markets covering Bitcoin, Ethereum, Hive Digital Technologies, and BMNR. Let's start with the big picture. I've been giving a lot of thought to where we are in this current market cycle, and to be honest, I'm a bit concerned about what could unfold as we move into 2026. When you look back over the last 100 years of market data, a very clear pattern emerges. Roughly every 2 years, the market corrects by 10% or more, and that's completely normal, even healthy. It's part of the natural rhythm of growth and reset. But every 6 years or so, history shows us something bigger, a 25% or greater decline, which usually defines a true bear market phase. If you line up those historical cycles with what we saw during the COVID correction and the broader recovery that followed, it starts to paint a clear picture. Based on the timing of these cycles, 2026 looks like the next major top. It's potentially marking the start of a larger bear market that could bottom out sometime around the end of 2027. Now, that doesn't mean there won't be opportunities along the way. Far from it. Even in tough markets, there are always pockets of strength, short-term rallies, and setups that can deliver solid gains if you're disciplined and patient. Now, let's talk Bitcoin. BTC is still in an uptrend overall, sitting in a large order block. It's been holding strong. But there is one key level I'm watching closely, the 50-day EMA on the weekly chart. A close below that line would definitely raise a few red flags. But for now, we'll have to let price action play out and see what happens. On the flip side, if Bitcoin rebounds but fails to make a new high and reach one of the next two major Fibonacci extensions around 131, 317, or 143,100, that could form a double top and signal the next leg down. Those are the levels to watch, because if we stall there, it's often the market's way of telling us momentum is fading. Now shifting over to Hive Digital Technologies, this one continues to follow almost perfectly what I mentioned in my last video when I talked about that $11 price target. Right now, Hive is sitting at a very critical level, a break it or make hit zone. I haven't sold a single share since that last update, so people might call that foolish, but time will tell. If you remember that yellow trend line I pointed out, dating all the way back to August 2022, which finally broke above on October 6th, I said that a retest of that area would be crucial for confirmation. And here we are, testing it. If this zone holds, meaning the old ceiling truly becomes the new floor, that's where conviction matters. This is when you stay focused, manage your risk smartly, and trust your analysis. But I'll be honest, it's been a roller coaster. My P&L has dropped over $50,000 in just 2 days because I'm still holding. That's trading. It's never comfortable watching profits evaporate, but that's the reality of conviction trading. If we break below that yellow support line and close under the 200-day moving average on the weekly, I'm out. Simple as that.
Yeah.
But if we hold and confirm the breakout, this is exactly where you want to add to your long position. This is what separates the boys from the men, the ability to stay calm and act decisively when everyone else hesitates. Now, let's move to Ethereum. ETH is in a very similar position to Bitcoin, still technically in a bull flag on the daily chart, and it has been holding the 200-day EMA, which is exactly what you want to see in a healthy continuation setup. A clean close below that level would likely signal more downside, and that the top is in. Zooming out to the weekly chart, ETH recently tapped the 50-day EMA around 3,289 and entered a fair value gap that ideally should hold. If it fails to do so, that would confirm the top is already in place. But as of now, I'm still leaning bullish until the chart gives us a reason not to be. If ETH does hold and starts pushing higher, the next major Fibonacci extension I am targeting is 6,034. That is the next high value zone that could offer major resistance. Keep your eyes on that one. Finally, let's talk about BMNR. This one's a bit trickier to read right now. The key is to stay above the 50-day EMA. If that level breaks, we could see a deeper pullback. And it's going to depend a lot on how Ethereum behaves. Long term, I'm still bullish. Short term, though, the weekly chart could show a retest of the 20-day EMA around $43. I don't think we will get there based on the overall bullish sentiment we are seeing in the options chain. This week, I was expecting a weekly close below $57 due to the heavy open interest at that strike. and a close above $50 given the large put open interest at that level. Remember what I said before? Institutions will make these contracts expire worthless 9 times out of 10. It's just how the game is played. So, for next week, I expect BMNR to trade and close between $47 and $55, based on the open interest activity, which you can see right here. That's the range I'm watching closely for confirmation. And that wraps up this week's update. I hope this helps give you some perspective and a little more peace of mind as the market continues to move through its cycle. Remember, it's not about predicting every move perfectly. It's about positioning yourself intelligently and letting the market tell you what it wants to do next. If you learned something in this video, make sure to subscribe and click the bell icon to stay connected with future updates. As always, this was another pipeline trading video. Stay disciplined, trade intentionally, and God bless.